This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-presented by Canara Bank. Together we can.
Good morning. You're watching the Business Today show for the market opening action with me, Sakshi Batra, where we get you all the opening action in trade. First up, let's take a look at the top headlines this hour. Modi government launches National Monetization Plan 2.0, targets a whopping 16.7 lakh crore rupees in asset monetization in the next 5 years to bankroll infra dreams and fiscal health, assets to be leased via InvITs and concessions. Finance Minister says the move could raise nearly 5 lakh crore rupees for the centre. Indian exporters await clarity as Donald Trump's new 10% global tariffs kick in today. Sources tell Business Today television that the increase to 15% has not been notified by the Trump administration as of yet. Exporters also say India will gain if tariffs remain at the current levels. Donald Trump is furious after the European Union freezes the ratification of its trade deal with the US. The US president threatens higher tariffs for countries that play games with a ridiculous Supreme Court decision. European Union decision comes just a day after India paused its trade talks with the US. US markets stumble on trade uncertainty and AI fears. IBM is down more than 13%, its steepest fall in last 25 years, a scenario from June 2028, painted by a little-known research firm, Citrini, that has spooked the markets. Asian markets also fall at the opening over AI anxiety. It's a major blow for the electric car industry. Electric vehicles likely to lose their green image. Reports indicate new fuel efficiency rules will now ask car companies to account for power consumption in the emission numbers. This move could lead to higher efficiency among electric cars as well. First up, the big breaking news on your screens, viewers. This is crucial. Tata Sons board meeting today. Remember, the board meeting will be considering chairman's tenure. That is, Mr. N. Chandrasekaran may now get a third term clearance granted by Tata Trusts. Earlier, the third 5-year term was to start in February of 2027. For more on this, let's go across to my colleague Krishna Gopalan, the executive editor of Business Today. Krishna, you've been tracking the Tata Sons story very, very closely. What does this mean? The board meeting today, starting much before the tenure gets over in 2027.
Hi, Sakshi. Good morning. Nice to be here. There are a couple of factors that need to be understood. This is Chandra's third term, as rightly mentioned. And he took charge in 2017. So the first term actually was done in 2022. And this is coming up much ahead of schedule. There are a few points here. The board of Tata Trust has been reconstituted post the passing of Mr. Ratan Tata. So Noel Tata is now the chairman. So it's a new look board. Obviously, a lot has changed since then. Speaking for Chandra's own potential extension, there are a few factors that need to be considered. He's had a few big-ticket developments in the last 10 years since he's taken charge. Notably, the acquisition of Bhushan Steel by Tata Steel, the spinning off of a key division of Tata Motors, and the acquisition of Air India. However, we also have many headwinds that he's got to look into, most notably being the investment in digital, the gigafactories, and, as all of us know, the big turnaround of Air India. So these factors will be weighed. At the same time, keeping in view the background given the reconstitution of Tata Sons. So Tata Trust, my apologies. So that also needs to be looked at. So we're really looking at a new development as far as the tenure of Chandra is concerned.
Right. Now, Krishna, like you rightly pointed out, some big ticket developments have happened, under his tenure. We've actually seen the group's market cap also surge past $365 billion mark as well. We've seen the privatization of Air India and several other key, points that we have considered. At this point in time, the entire group is also navigating high stakes in terms of future-facing projects, aggressive push to semiconductor manufacturing. You talked about the battery cell gigafactories, the EV space expansion, and right now the big concern with respect to AI and the disruption that is being seen on the IT space, especially with respect to TCS. What do you think is in the offing going forward?
I think the implication is far more dangerous than one can understand because TCS is pretty much the cash generating machine for Tata Sons. And given what's happened, as you rightly mentioned, in terms of even the IBM stock taking a hit this morning, the whole AI story is now getting into a phase of huge disruption. So TCS's numbers offer a mat anybody, be it Infy, Wipro, they've been under serious pressure. Common sense would tell all of us that the AI juggernaut is not likely to slow down anytime soon. So the dependence on TCS coupled with the fact that there are big ticket projects, and even at the most conservative estimate, we are speaking of a capex outgo of at least $100 billion, be it semiconductors, gigafactories, Apple, or even a potential acquisition. So if TCS, it is critical for TCS to fire in the interest of capex being funded out of it, because it just becomes easier for Tata Sons to raise that kind of money in the market. So the disruption in AI is something they could have easily avoided, but unfortunately it's beyond their control. But these factors together will have to be looked at the time of renewal. It's not as if it won't go through. That's not the point I'm making. But fundamentally, I'm saying we're getting into a phase of serious business disruption, and this is really the making of a new TCS in that sense.
Absolutely. Thanks a lot, Krishna, for getting us all of those details. Of course, more details will be, coming out once the board meeting is over, and you will be able to give us more clarity as to what has been decided going forward from here. But this is an important one that all of us have to keep an eye out on today. Let's actually welcome our guests on board. Dharmesh Kant is now joining in on the program, and we also have Shail Bhatnagar, our, consulting editor for markets in Business Today. And look at how the Nifty is trading at, in the pre-open trade, 25,641 right now. We're down about 71 points, so indicative of a softer opening in trade. Remember, we've had 2 consecutive days of a positive mood, and the expiry session starts today. Let me go across to Shail now. Shail, good morning to you. What are you watching out for in the markets today? Again, it's going to be IT that will be the pain point?
Well, good morning to you, Sakshi, and a very warm welcome to Dharmesh ji whenever he joins. A warm welcome to let's look at the set of the market. You've highlighted a lot of negatives which are seeping in from Wall Street. Extreme volatility. And of course, we have the end of account for February on today. But look at the Nifty Energy Index. Look at oil and gas sector. Look at how the CPSE index is shaping up. And of course, how the EV space is shaping up. These are spaces where long trades can be taken. And of course, there have been fresh bullish crossovers in the logistics space, manufacturing space, and of course, the steel space. So stocks such as Siemens, stocks such as CG Power, ABB, the MNC setup, Cummins India is doing immensely well. And gold, Sakshi, will now outperform silver.
Right. Now, Shail, I also wanted to understand from you when it comes to the expiry, what are you expecting on the Nifty today? And of course, this is going to be extremely important. February has not been a month which has been celebrated because we've continued to see the sell-off on the FIS front.
That's true, Sakshi, but look at the better part of this all. Nifty, let's leave it to professional traders, but look at the PSU banking setup. People have made tons of money on SBI, on Bank of Baroda, PNB, Canara Bank. This is a sector that we've highlighted often. Metals has kept quiet, but let's look at the positives. Let's look at the CPSE setup now. Let's look at the energy space. Lots of trades happening. Let's look at the MNC space connected to the energy space. Sakshi.
Absolutely. We've seen the markets open at 25,600, swiftly moving below that mark, and about a 0.5% downtick on the Nifty at this point in time. Viewers, you're looking at most of the sectors that are trending lower, barring what Shell pointed out. Oil and gas continues to be higher. Private banks also showing us some strength at this point in time. On the Nifty also, you're looking at a far and few between names that are higher in trade. You have L&T, you have ONGC, Dr. Reddy's as the names that are higher, but on the lower end, again, it's the IT pack. Remember, the IT index is down by over a 2% mark right in the opening session right now. So Infosys, HCL Tech, TCS, Tech Mahindra, Wipro, all 4-5 stocks from the IT pack are the top drags right now. Dharmeshji is now joining in on the program. Good morning to you, Dharmeshji. Good to have you with us. Well, what do you make of the consistent IT sell-off that we've been witnessing? It was the severe downgrades by Jefferies yesterday. Today again, CLSA has come out with target cuts on across 8 companies. Of course, the AI anxiety is, leading to more pain on the IT space. What do you expect here? First, it was the export-oriented problems, the tariff-related issues that we were dealing with, and now it's AI.
Yeah, good morning, Ava. Really a difficult and tough times to, deal with. As far as, IT companies are concerned, the problems were there for multi-years. So it's just an anthropic, sealing the future hope outlook, which was there on the IT sector. I will give you a small data point. FY19 in Nifty 50 basket, the index, whatever IT companies was there, the aggregate profit was around 70,000 odd crores. FY25, the last year, they did 110,000 odd crores. So the weightage dropped from 21% in Nifty 50 to 11% as we speak. So, I mean, they were already in a set of trouble. They were trying, and there were different narratives played out at different time. First, it was interest rate cut, then there's discretionary spending and all. But it was not happening for the Indian IT companies. And now with Anthropic, the challenge is whether they will be able to sustain the revenue. So what will happen? Definitely the gaps will be filled by the integration job, which they will do by integrating AI into the different softwares. But the value addition of Indian IT companies, which are there to be offered on the table, will come down. So it will not be only a squeeze on the top line, but at the same time, the margins will further squeeze. And that's the problem with Indian IT companies. So where there is a clear trajectory that things are not going to shape up well, maybe you can fill the gaps, but you may not grow from here. Then why to buy in equity market? We always go for growth stories. So, I mean, there may be cash in the balance sheet, dividend flow, but this cash flow will also, slowly taper down. So divided camps are there. I am in this firm camp that there will be tactical bounces definitely on IT companies, primarily helped by currency depreciation, but those will be tactical. It's not a structural story to play out. So we are avoiding except one stock or inflow solutions. Otherwise, we are out of the IT basket completely.
Okay, we'll take another big breaking coming on your screens now, viewers. This is with regards to State Bank of India now forecasting big boost in terms of the GDP numbers, the Q3 GDP growth. Now, SBI research report indicates that the Q3 GDP growth could be seen at 8.1%. So GDP growth beyond 8% could be coming in is what the key expectation is. SBI research report also indicates that consumption remains strong overall. They've also expected that FY26 growth is seen at 7.4% versus 7% in the economic survey. And the second advanced estimate release will be on February 27 for the same as well. What they're expecting is that the Q3 GDP numbers could be well beyond 8% at 8.1% as well. So big boost is what you could expect in the coming up Q3 GDP numbers there. So that could be a big positive that the markets can take heart from at this point in time. Dharmeshji, how do you view this? And do you think that the markets will be able to, seek some kind of a courage from these strong domestic numbers, even if the external environment is very shaky at this point?
Well, my sincere apologies, Sakshi. In the rush, I said Ava, so good morning to you, Sakshi.
Good morning.
I mean, if you look at the Q3 numbers, so the numbers were pretty good. Outside the Nifty 50 basket, we did an aggregate of over 500 companies, and there the run rate of the PAT growth, despite taking labor cost into account, was 20% on year-on-year basis and around 9.5% on a quarterly basis. So there are many pockets and sectors of the domestic fixing economy which has been actually doing well, and all the tailwinds of rate cut and indirect tax rate cut has been playing out. So definitely we think that the GDP forecast, the real GDP forecast which people are saying will come through. What is more important is the nominal GDP forecast, because that is what plays out into the corporate earnings growth trajectory. So that if crosses above 11.5%, would be a music to the ears for FY27, because the prices have corrected quite sharply for all the companies and valuations are now very comfortable. So to my mind, I think we will do more than 11% kind of a nominal GDP growth, rather than getting restricted to 10.5%. So that will give you a 12 to 14% kind of a tailwind on the earnings growth for FY27. So the market broadly is a very good place for doing your cherry picking across the segments. Only concept is go bottoms up, don't go top down.
Bottoms up is the strategy that you need to follow at this point in time. Don't go top down into the markets. There are several opportunities that you can definitely look at as well. Any key other stocks that have come onto your radar, Shell?
Sakshi, I'm just looking at the pain in the market. So monthly expiry, Nifty is down 143 points. Very hard to suggest a long trade at this point of time, despite what SBI Capital and their research team are telling us. You and I have to grapple with the daily realities of life. But maybe for the month of March, we will see the Nifty Metals Index do pretty well, because February has been painful in the sense that profit booking has happened, except for steel, where record highs have been seen. So the usual suspects, look at Hindalco, look at National Aluminium on the long side. Nice correction that's happened in National Aluminium. From 432, we are down at 342. So 33% correction in price. Actually, a 25% correction in price. So those are spaces that I would look at.
So the metals index could be in flavor. In a bold move now, viewers, to fuel the country's infra boom, the government has now rolled out National Monetization Pipeline 2.0. This ambitious plan is now likely to raise 4.6 lakh crore rupees for the government in the next 5 years, while unlocking 16.7 lakh crore rupees in asset value to supercharge infra funding. Finance Minister Nirmala Sitharaman has launched the plan last evening by saying that it is more than 2.5 times bigger than the first plan, which raised about 4 lakh crore rupees. The new pipeline envisages private investments of 5.8 lakh crore rupees as well. And the biggest pie in the monetization plan, more than a fourth, actually comes from highways and logistical parks as well. The other big contributors will actually be power sector, ports, railways, coal and mines. And for more on this, I'm now joined by Karishma Sudani. Karishma, big jump from NMP 1.0 at this point in time. So the government is looking to raise a good amount of fund over the next 5 years. Private capex and private investment is also expected to jump by a huge amount.
Well, Sakshi, absolutely right. In fact, you mentioned that this is a 2.5 times higher target that they're looking at. It was the National Monetization Plan Phase 1 of 6 lakh crore, which has been almost 92% achieved as per records and the early estimates that have come in, which definitely gives government a boost to take it forward. If you remember, it was during the budget press conference back then, when we had also asked the Finance Minister Nirmala Sitharaman on her plans on disinvestment, and she did very loudly mention that more than disinvestment, her focus is now going to be on National Monetization Plan. The government has been big on its infrastructure building, and to put this amount in highways and railways, followed by other infrastructure instruments, is the crux of how they're planning their economic policy towards 2040. A strong capex target of more than 11 lakh crore also indicates that they want the government expenditure to be used in order to build infrastructure, which will indirectly, of course, encourage investments.
Absolutely. Thanks a lot, Karishma, for getting us all of those details. So the infra space will largely be in focus. Dharmeshji, any key favorites in the infra space or overall in the markets?
Yes, actually, Larsen & Toubro continues to be the favorite, and they were, several news flows sounding that they will lose business in the Middle East. Nothing like that is happening, and the companies, being such a big conglomerate, continues to march on with new order flows. Even now, they enter into the defense sector with fifth generation aircraft manufacturing will again add to their overall arsenal. Run rate, they are sitting on a pretty large order book. The run rate of the order inflows has been quite good, and they have been able to maintain the operating margins. So that will be the first beneficiary of this entire extra spending which will come through. I think railway is one sector which has been neglected for quite some time. 2 years have been lost in the railway space. Things are picking up out there. Railway minister has been sounding very aggressive on announcing different projects and awards. So I think that is one space which one should look into. And there, our topic has been not financing, but on the infra space, that is Incor International. I think valuation-wise, is the cheapest among the railway basket. One should be looking into that. And IRIDA, that is one more finance company which will benefit from all this power and renewable energy segment. The numbers were pretty good for last 4 quarters, and the stock price has taken sharp beating. It's a very attractive valuation to buy at around 120, 125 levels. And we are looking at around 160, 170 from a 1 year perspective kind of investment horizon.
Absolutely. But I have to ask you on the IT space, which is continuing to slip even further now, down by 2.7%, nearly a 3% cut today on the index level particularly, after IBM has crashed about 13%, and what we've been seeing as an impact of Anthropic and other AI-related issues. How are you approaching the sector? Are you completely exiting it at this point in time? Are you looking to buy at the lower levels, looking at some improvement or restructuring to take place, reimagination to take place at these companies? Because these are fairly large conglomerates that we're talking about.
Sakshi, they are, but the performance has not been to the mark. So they have been losing business. They've been struggling to maintain their run rate. So last 2 years, despite intermediate IT rallies, we were totally out of it, and we never recommended. Except, 2 counters in between, we did have a trading bet on Coforge and Persistent System. And last couple of weeks back, we were totally out. Only one company which we have been maintaining as a buy call in the IT space, that is Orion Pro Solutions Limited. And the reason is that it's not a SaaS company, it's a product company, basically, and they have an ARIA AI model for banking and transaction suite. So last 3-4 months, if you look at, they have won 7 orders, 3 from public sector bank on the banking transaction suite. Data center also, they have got an order from IDBI Bank and another public company. It's a foreign company, and 1,700 odd crores of order book they are standing on. The order pipeline is very big. Our interaction with the management says 3,000 odd crores. I think 25-26% of a run rate of PAT growth for next 2 years is very foreseeable, and it's available at 16-17 times price earning multiple. So that's the only company which we are looking at. 1,675 is the target price from 1 year perspective.
Fantastic. We're out of time now. Dharmeshji, thank you so much for being with us on the morning edition and helping us with all those market insights. Thanks a lot, Shell, also, for giving us all of those insights on the markets as well. Viewers, we'll wrap it up on that note, but do stay tuned with us on India Today. And don't forget to tune in back at 3:05 p.m. when I get you all the market closing action on India Today.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Ladies and gentlemen, a warm welcome to all of you on Business Today Television. Today is the last day of the FNO expiry for the month of February, plus a lot of pain that is seeping into the Lal Street from Wall Street. The biggest casualty today is the Nifty IT index. At the moment, you see a 3% downtick on the IT index, and these are prices that were seen in October of 2023. So it's a very, very painful time that is coming in for the IT index, and a 3% downtick. Even if you look at the Nifty, stocks like Infosys are pulling the Nifty down by 40 points. Infosys is down 3.25%. TCS is pulling the Nifty down by 18 points, itself down 3%. HCL Tech pulling the Nifty down by 12 points, itself down 3.5%. Apart from that, Bharti Airtel has announced a diversification into an NBFC. The market seems to be a bit circumspect about it, 2.5% down, pulling the Nifty down by 31 points. Overall, the Nifty is down 177, Sensex is down 632, Nifty Bank is down 55 points. The PSU banking setup is holding on, and we have the Nifty Metals Index as the top gainer. Remember, February has not been very kind to metal stocks. Profit booking happening on the main index itself, and you have 1199 that is there as far as the index is concerned. 1.5%, 0.3% uptick, but pain all around in IT. The sell-off is unbelievable, and this is getting to be a very, very painful time for multi-month lows that we are seeing on Infosys, down 3.22% at 1284. And remember, this is the price that you have seen somewhere in April of 2023. So, ladies and gentlemen, a 3-year low on Infosys. What we'll do is we'll consult with Arpit Beriwal. He joins us on the show. A very good morning to you, Arpit. It's a painful time for IT. How are you evaluating the situation, your view for the FNO expiry for today?
Very good morning to all. So first, if you talk about the Nifty index, so definitely Nifty index has been a huge underperformer in the last couple of months, and especially if we see the gap up opening on the 2nd Feb of this month, 3rd Feb, post that we have seen a very sharp fall in the IT index from 40,000 to we have seen a corrective move towards almost 30,000, and this has been the structure wise. So technically, if we see structure wise, definitely on a monthly scale it is down by almost 19%, and it has also breached its swing low of April 2025, that is 30,500 levels. So looking at the setup wise, if it closes below 30,500, we can see more weakness towards 29,000, 28,000 levels positionally from here on. And also if we see the setup wise, definitely all the stocks also given a fresh breakdown. So it's better to avoid, and if you're holding well such stocks, it's better to wait for any further averaging out, and from a trading bet, it's better to go on the short side to play 5 to 7% move for next couple of days time frame in the IT index. Along with that, if you talk about overall the Nifty structure, so Nifty is definitely underperforming mainly because of IT index, and Nifty is trading in a range between 25,350 to 26,000 from last almost 13 sessions. And look at the setup wise, 25,400, 25,450 is a major support zone. On the upside, 25,650, 700 is a hurdle zone. So our sense is that Nifty is likely to trade between this range between 25,400 to 24,650 wise. The main reason behind that is Bank Nifty is relatively outperforming, which is holding the overall market structure. Because of it, Bank Nifty is relatively outperforming. So from an expiry point of view, relatively Bank Nifty is outperforming with major support around 61,000 levels, whereas Nifty is underperforming with immediate hurdle around 25,650 levels. So it's kind of a sell on Nifty with a buy on Bank Nifty. So it's within a range for expiry point of view.
Okay. 9:34, the first 15-20 minutes of trade have lapsed. There is selling pressure all around. If you sort of ignore what's happening in the metals and the PSU banking space, are there any new highs? Yes. Look at NTPC. These are fresh 52-week highs. Some of them are record highs as well, such as on SBI and L&T, but profit booking coming in from there. Torrent Pharma had a fresh record high. Karur Vyasa Bank doing pretty well. We've always discussed Indian Bank in great detail, and of course you have strength coming in into counters such as ICICI, AMC and Polycab. So that's what's happening in terms of strong percentage gains. I don't want to name these stocks on air, but maybe Blue Jet Pharmaceuticals 406, up 3.86%, and Mopen Labs 47.3, up 4.4%. These are the stocks that are beating the broader bearish move that is coming on Dalal Street. Arpit ji, anything that you observe?
So overall, if you see, sector-specific action is still there, and as rightly mentioned, my PSU banks has been the outperformer sector for the last couple of weeks, along with the metal index. So it's more of a sector-specific approach, and couple of stocks that are there on radar from the PSU bank. First would be Union Bank itself. So look at the setup-wise, a classical range breakout on the monthly setup above 180, 85 levels, and in spite of market weakness, the stock is slowly steadily moving higher. So I think from here on also, a sense is that definitely. Union Bank is likely to outperform with major support around 180-85 for an upside move towards 220-225 levels. Along with that, second would be from the pharma pack, and that is Torrent Pharma. So where we have seen market has been very much jittery, choppy, but selective pharma names are holding really well, and slowly the stock is heading towards life high territories. So monthly setup very strong, range on the weekly setup about 4200 levels. Looking at the setup wise, we can see good move towards 4400, 4600 positionally. So Union Bank and Torrent Pharma looks good on the positive side. Along with that, if you see the market breadth has been mixed, so we have to also go with the shorting opportunities. And if you look at the setup of Musdog Dog from the defense space, it looks relatively weak. And from a March series perspective, we can expect good 5 to 6% corrective move towards 2100, 2050 levels. So Musdog would be on the sell side for the March futures with support stop loss around 2380 for a downside move towards 2100 zones.
Okay, so that's the view coming in on the sector and the stock. Would you want to comment on Punjab National Bank? We've seen yesterday's fall getting bought into. What are the charts telling you here?
So definitely, if you see, PSU index has been a huge outperformer. If you look at the quarterly chart section of PNB, relatively it has been a slow mover, because if you see the monthly setup wise, it is still trading in a falling channel from last couple of months. The immediate basis, if you see the setup wise from last almost 3 months, the trading range has been 120 to 135 levels, and immediate basis also has sense that till it holds above 125, the upside move can be seen towards 135 levels. Closing above 135 will definitely open the further momentum. So a range bound counter with overall positive setup, with 125 as a support for an upside move towards 135 levels.
938, that's the space that we are looking at. In terms of rollovers in strength in the FNO space, what are the stocks that are looking good for the month of March, Arpit?
So as we have already discussed, that couple of stocks that are holding well, and if you look at the chart structure of particularly such as from the auto space itself, this is Bharat Forge. So we've seen a very strong setup on the price action wise on the monthly setup and the weekly setup, where the mid cap index is underperforming, but the auto ancillary stocks are very outperforming. So Bharat Forge has seen a good rollover for the March series, also broadly in line, and along with the setup wise, 1760, 1780 is a major support zone. So look at the setup wise, definitely the stock can head towards 1880, 1900 levels. Positionally. Along with that, one more from the PSU bank that would be from the FNO space would be Indian Bank. So where the stocks have been, PSU banks has been outperforming, Indian Bank has been a huge outperformer. So strong formation on the monthly setup, forming high rise, high low structure. On the daily scale, it is respectively short-term moving averages, a range record above 920 levels, and trading at life high territories with good rollovers for the coming series. So Indian Bank and Bharat Forge looks good for the March series, where we can see a good upside move of 5 to 7% going forward within the FNO space.
Okay, 5 minutes of the show left. Profit booking is seen in many stocks. In the power sector, Arpit, we have stocks like Cummins, stocks like Power India, which is earlier Hitachi, Siemens, ABB showing signs of life. CG Power in particular. Anything in this segment which catches your fancy on medium term charts?
So, as we like to go with the heavyweight and the outperformers, so first we'll stick to Cummins India. So, it's been a very strong uptrend, forming higher rise high structure on the monthly scale, strong bullish candle, negative the formation of lower rise after 2 months, trading a life high dailies, very rich, strong breakout above 4600 levels. So, Cummins India will be a first pick where the stock can head towards 5000, 5200 levels positionally with major support around 4600. Second would be Hitachi Energy. So, if you see the overall setup, Hitachi Energy also a very strong pole and flag breakout on the monthly setup after almost 8 months. Range breakout above 22,000 levels. So from here on, we can expect good 10 to 15% rally towards 26,000, 28,000 positionally. So Cummins India and Hitachi Energy looks good. We can expect good momentum for the upcoming series.
9:40, ladies and gentlemen. For the moment, this is bleak. Infosys is the top traded counter, 3.5% down. Almost 594 crores worth of 600 crores worth of Infosys has been traded. Weakness again in IDFC First Bank. Remember, yesterday the stock collapsed 17% on that very difficult news scam in one of its branches in Chandigarh, where 590 crores has been withdrawn illegally by some collusion between office staff at IDFC First Bank and some government officials for the state of Haryana. 1% down again. What you see is 69.35, and at 69.35 this is again a multi-month low for a bank whose stock is visibly in pain. So what you see is September 25 prices. Arpit ji, before we let you go, what is a buying zone for IDFC First Bank, if at all?
So if you see, I'll just look at the monthly setup because the stock has seen a brutal selling last couple of days. So if I see the monthly chart setup from October, almost July 2025, the stock was trading near around 64, 65 levels, and this has been the major support zone between 60 to 70 was the 60 to 70 was the earlier band for this stock for last 1.5 years. So I think immediate basis 60 to 64 is a major support zone. However, in sense that we have seen a very sharp gap down, so it's better wait for any reversal. But look at the setup wise, 62, 64 is a major support zone where one can look out for to buy some quantity, and once the stock stabilizes, then we can add further. So 62 to 64 is a major support zone for this stock, for this counter on the monthly basis.
9:42, ladies and gentlemen. Let me just mark some good volume buzzers on this monthly expiry day. AGS Logistics 5.7% higher, very heavy volumes, 17 times 5-day average. About 34 lakh shares have been traded. We've discussed Blue Jet. Stationery maker DOMS 2.2% higher, 2347. IDFC First, as I've been telling you, is in pain. Chennai Petro 2% higher. Mahanagar Gas in the green on strong volumes. Karur Vyasa Bank in the green, 0.5% higher, strong volumes. JK Bank 105.7, strong volumes. So that's the setup that we have, ladies and gentlemen. We'll thank Arpit before we close it. Thank you very much, Mr. Beriwal, and here's wishing you a day of pain and good luck because of the kind of pain that we are seeing. 227 points down on the Nifty, and it's just first half hour of trade. Let's see how it goes, but as always, a pleasure speaking to you.
Thank you.
Well, that's it, gentlemen. First half an hour has lapsed. It's the monthly expiry of the Nifty, therefore selling pressure continues. IT has almost destroyed sentiment for itself and for the broader markets. Pain all around, multi-month, multi-year lows on the index, on Infi, on TCS. Look at TCS. I think this is a 4-year low that we are seeing on TCS in terms of 2588. There is absolutely no support coming in. The advent of AI in America and the sell-off that we've seen on Wall Street has pushed this stock to hold your breath. This is the lowest since September 2020. So this is a 5.5-year low. On that very bearish note, ladies and gentlemen, we'll call it day.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.